Okay, good evening, everyone. This is Colin here. Today, the date is Friday. Today is 1st of April Fool's Day, and the time is 5. The reason why I'm doing this webinar early is because later part I have some engagement. So let me just go into this webinar is especially for our graduates. Okay, so first thing first, let me just go through the different markets, and later part we will go through some stocks. Okay, today if we have time, we will talk about a little bit about what is chart patterns and how you can use chart pattern to help you to decipher the charts better. Okay, so yeah, maybe before we go to looking at the markets, let's maybe just go do some revision of what is chart pattern, or maybe for some of you, this is something that is quite new. Okay, so let me go on to the next screen, then I can show you what is chart patterns all about. Okay. Okay, so this is my slides last time for chart patterns. Basically, let me just go through this part. Okay. Okay, this one I think is okay. We'll skip this part. Okay, chart patterns. Okay, so chart patterns, basically there are two major types of chart pattern. The first kind of chart pattern is what we call a reversal pattern. Okay, the other one is called a continuation pattern. Okay, a reversal pattern, what it means is a reversal pattern signals that a prior trend will reverse on the completion of the pattern. So let's say example, the prior trend was down. Okay, so after this pattern, the next trend will be up. Okay, so that's why I call a reversal. Or let's say example, the previous trend was up. So after this reversal pattern, the next trend will be down. Simple. So this is a reversal. Okay. A continuation pattern indicates that the prior trend will continue up onwards upon the pattern's completion. So a continuation pattern will be something like when the prior trend was up, okay, then the continuation pattern happened, the next trend is up, and then vice versa, when the trend is down, continuation pattern, and then next trend is still down. So this is continuation pattern. Okay, so it's important to identify whether a pattern is a continuation pattern or whether it's a reversal pattern. Okay, so that is the first thing we need to know. Okay, reversal pattern and continuation pattern. Okay, before we go to the, okay, these are the typical reversal pattern. Okay, typical reversal patterns are things like head and shoulder, top and bottom, double head and shoulder, double top and bottom, triple top and bottom, rising wedge and falling wedge. These are the common reversal pattern. Okay, for the continuation pattern, there are a few patterns. Example, the triangles. We have symmetrical triangles, ascending triangle, descending triangle, bull flag and pennant. Okay, so these are what we call continuation patterns. Okay, so so far we learned that there's two types of pattern. Okay, continuation and reversal pattern, and then there are two category. Okay, inside each pattern there's different types of pattern, um, types of continuation pattern and different types of reversal pattern. Okay, so let me go through this very important slides. Okay, this is I think maybe the most important slide in the whole presentation today. Okay, the number one is when you want to look for the chart pattern, the first thing first is the existence of a prior trend. Okay, the existence of a prior trend is important. Okay, why is the existence of prior trend important? Because only when you know what is the prior trend can you know what is going to happen next. So example, if the prior trend is uptrend, okay, and then the reversal pattern happen, then you know that the next trend is downtrend. Okay, so example, this one we see over here, head and shoulder pattern, head and shoulder top or bottom. This is what we call a reversal pattern. Okay, so you cannot use it like a continuation pattern. So what it means is cannot have a prior trend that is uptrend, okay, followed by a head and shoulder top, and then the next move is uptrend again. So then it breaks that definition. Okay, so let's say example, this is a head and shoulder top, then the previous uptrend after the head and shoulder top, this must be a downtrend. You follow? So if let's say example, if it's a uptrend, and then head and shoulder, and then the next one is up, then this is likely that this is a head and shoulder pattern. Does it make sense? So then one need to know where to apply these patterns. Okay, so vice versa. So you cannot have a double top and then follow. Let's say parallel trend is uptrend, have a double top and then subsequently it goes uptrend again. It cannot happen. So it can after a double top, it must go down. Okay, if not, then that is not a double top. Okay, so similarly with a reversal pattern also, with continuation pattern also. So you need to understand this. Okay, so this is the first thing. The existence of a parallel trend important. Okay, for any reversal pattern. Okay, the next one is the first sign of impending trend reversal is often the breaking of an important trend line. So as later I'll cover this part. Okay, what do you mean by the trend reversal? Okay, so trend reversal, the first thing that happen is always a breaking of the uptrend line or breaking of the downtrend line. So you need to understand that first. Okay, so when you have a break of uptrend line or downtrend line, then that it may tell you that there is a possible reversal pattern. Okay, so number 3 is the larger the pattern, the greater the price movement. So larger pattern, what does it mean is how long does this pattern take to build? Say example, you have a pattern that let's say a double bottom pattern that took 6 months to build. Okay, compared to a double bottom, let's say that took maybe 2 weeks to build. Okay, so it's not so significant as compared to a pattern that took 6 months to build. So the larger the pattern, the more the price movement will be higher. Okay. Number 4, topping pattern are usually shorter in duration and more volatile. Okay, so topping pattern, what happened is because when we talk about market going down, generally there's a lot of panic. Okay, so usually topping pattern would be usually quite fast. Okay, within like a short period, okay, panic will happen and people will rush out of the market. Okay, and it's also more volatile. So during that market top, usually there's a lot of movement of money from the smart money out from the smart money into the less smart money. Okay, so there's a lot of price movement. Candlesticks tend to be longer at market top. Okay, candlesticks will tend to be longer, take shorter time to build and more volatile. Okay, as for the bottom usually the candlesticks are smaller. Okay, so when you see like let's say a double bottom or a triple bottom, then or head and shoulder bottom, then a reverse head and shoulder. What it means is the candlesticks are usually smaller. Okay, and it sometimes takes longer to build because confidence takes time to build. Okay, like for example, market is turning from bad, very bad to slightly better. This is a reversal pattern. The candlestick, the confidence takes time to build. Whereas panic is very fast. When we real panic, people will actually run and exit out of the market. So that's why the market top is usually more volatile and higher, longer candlesticks. Okay, so that's number 4. Number 5, bottom are usually important. Okay, especially actually the smallest price range and take longer to build. This one I covered just now already. Okay, number 6, volume is usually more important on upside. Okay, volume is like your fuel. Okay, so let's say example you go to battle. Okay, this volume is actually your fuel. So let's say example, if the stock were to go up, okay, you need to have volume to confirm. Okay, you need to have volume to confirm that the price is going up. Let's say example, you have a breakout pattern, then you want the volume to also be breaking out also. So volume must agree with the price. Okay, on the downside, okay, sometimes they have what we call a stealth breakdown. Okay, stealth breakdown is what happens is it may break down from a pattern, but the volume initially can be small. Okay, so people are not panic selling, but after a while it develops and then the big volume comes in again. So it's like a stealth drop. Okay, so sometimes on the downside, the volume may not pick up immediately. Okay, but for market that is going up important, it must have a volume to confirm. Okay, so these are very important points that everybody should know when identifying chart patterns. Okay, 1, 2, 3, 4, 5, 6. Okay, if you have grabbed these basics, okay, I think this is very useful for you. Okay, the next thing is I want to spend some time to actually talk about what is head and shoulder top, because from how you can find what is head and shoulder top, or how you know how you can identify head and shoulder top, you can use the same principle to apply it to the rest of your chart patterns. Okay, so let's spend more time on this head and shoulder top first, and then later part we will see whether we have more time for other patterns. Okay, so first thing first, head and shoulder top. Okay, first thing first, we have a prior trend. So if it's head and shoulder top, what happened is the prior trend should be what? Should be up. Okay, prior trend should be up. Okay, then followed by a left shoulder, followed by a right shoulder, followed by a head, and then a right shoulder. Then a neckline, volume, neckline break, support and resistance, and then price target. Okay, let me explain. This is over here. Okay, so over here, thing first, you have the left shoulder. Okay, this is the left shoulder that's happening over here, followed by a head. Okay, which is higher, has a higher higher high in the previous left shoulder, and then after that a right shoulder, which is a lower high compared to the head. Okay, then followed by the completion of this pattern, a lower low, confirmed by the right shoulder. Okay, so first thing first, prior trend is uptrend. Okay, prior trend is uptrend, left shoulder, head, right shoulder, followed by neckline. Okay, what is neckline? Neckline is actually basically this line here over here. This is considered the neck. Okay, that's where you actually can draw the head and shoulder pattern. Volume. Okay, volume is something very interesting. Okay, in head and shoulder pattern, and in most chart pattern, this will happen. Okay, the first left shoulder, the volume will be the biggest. Okay, left shoulder volume the biggest, followed by head. Head, the volume is the second biggest. That means it's lower than the left shoulder. So as the price goes up, less people are convinced and going up, that's why the volume actually drops. Okay, so followed by right shoulder. When the right shoulder is formed, okay, volume is even lesser. So okay, volume is lesser than the head and also lesser than the right shoulder. So this is clues to let you know that this is a possible head and shoulder pattern. Okay, next thing is that one thing we didn't mention is that usually after the head and shoulder pattern is formed, when the head is formed, there is usually a break of the uptrend line. There's a break of the trend line to help you to identify, hey, this is a possible head and shoulder top. Okay, so next thing is a break of the neckline. This is what we call a neckline. If it's a break of the neckline, okay, this is a confirmation the whole pattern has formed. Okay, the head and shoulder pattern has formed. And support and resistance is when the previous support, okay, the previous support B and D becomes the resistance G. Okay, they become resistant over here at G. And the last one is price target. So something very interesting about chart pattern is you can always identify where are the price projection. Okay, how you use it is you can use the head, okay, measure down to the neckline. Okay, this will be the, let's say example, P, okay, price. And then from here, when the break of the neckline, you measure downwards. This will be your price projection. Okay, this is the minimum price target of how low the price can go. Okay, and there's also time projection. Okay, besides price projections, you can measure. You can also measure time projection. Time projection is measured as how long it takes to build the pattern. Let's say example, this pattern took 6 months to build. That is the time it will take for you to hit your minimum price target. Okay, which is actually this C minus the neckline. Okay, that is how long it will take to hit the price projection. Okay, so quite a few things over here. Okay, price projection, time projection, left shoulder, right shoulder, break of neckline, break of trend line. Okay, support and resistance, volume. Okay, volume should be reducing, and these are the things to help you to identify chart pattern. Okay, the head and shoulder, top and bottom. Okay, so how do you actually trade such a chart? Okay, there are several techniques you can use. Number one, you can actually short on the first sign of E, okay, which is actually over here. Once it comes here, the first sign of turning down, and you identify that volume is reducing. You identify break of trend line. You identify that there's a neckline over here after the E is formed. Okay, you can start to do your short around here. Okay, that's the first way of doing the first tactics. Second one is short around the 50 to 66% of the retracement. So how to calculate retracement is from here, head to D. Okay, this will be 100%. Okay, and if you retrace back up to 50% to 66%, then you do a short around here. So this is 100% C to D, and from there you retrace 50 to 66%, you can actually do a short. The last one is what you do is do a tight trend line on D and E. So how it works is actually you use this. This is actually not one straight line, but actually the line project. So you draw a trend line on D and E, and when the when there's a break of this trend line, CNE, you can actually go a short over here also. Okay, so these are the way that you can actually do trade a head and shoulder pattern. Using this principle, you can actually apply it to your other methods. Okay, you can actually apply it to your other chart patterns. Okay, like head and shoulder bottom. Similar same thing, head and shoulder bottom is just a reverse, okay, of head and shoulder top. Okay, so these are some of the statistics over here. And head and shoulder top failure rate is about 7% after the pattern is formed. A likely drop after the head and shoulders pattern is formed is about 15%. Head and shoulder bottom, the failure rate is about 5%, and the likely rise is about 20 to 30%. So after a pattern is formed, it will likely rise about 20 to 30. Okay, so this is some of the things that you can use. Okay, so besides that, there are other. I won't go into the rest of the details. Okay, you can hopefully can spend some time to read up on what is chart pattern all about. Okay, and okay, so these are some of the head and shoulder. Here are some of the reversal pattern. Okay, you should spend some time go and read through price projection, time projection, neckline, break of trend line, volume. Okay, all these are very important in understanding chart pattern. Okay, let me do one more. But let me pick up right now a triangle. Okay, a triangle. A triangle is actually a common continuation pattern. Okay, so since we have some time, let's do a triangle right now. Okay. Let's do a symmetrical triangle. Okay, symmetrical triangle, basically the idea is something like that. Okay, 4 points. Okay, to form symmetrical triangles. So trend. Okay, prior trend. Well, let's say example is going up. The prior trend should be up. So up, then go up. Then second thing is 4 points. Okay, so they must touch 4 levels. Okay, 1, 2, 3, 4. Minimum touch of 4 points. Okay, volume again. Volume for most pattern is decreasing. So when you first form the pattern, the volume will be higher, and then after that, the volume will increase. So generally, that's the idea. Okay. Then duration. Okay, usually duration is not long. Okay, continuation pattern are usually shorter in duration compared to your reversal pattern. Okay, continuation pattern are usually shorter. Okay, breakup time frame. Okay, you can actually do time projection from here. How long it takes to break? Okay, how long it takes to form this pattern is how long it will hit your price target also. Okay, another thing to think of for chart pattern is for triangles is usually it will not go to the apex. This is what we call the apex. Okay, apex. Okay, you break out around 2/3. Okay, 2/3 from the apex. Okay, so let's say example, this is the base of the triangle. Okay, this is the apex of the triangle. Likelihood it will not break out at the apex. Okay, if it breaks out at the apex, what it means to you is actually that it's going to be weak. About 2/3. Okay, along the way, 2/3 it will break out already. Okay, so this is something to take note also. The earlier you break out, the more strong is the triangle. Okay, breakout direction. Okay, remember prior trend is up, next slightly up. Okay, breakout confirmation is you need to have a confirmation of whether it break out. Remember when we say that price is going up, volume is important. Okay, return to apex. What it means is sometimes after it breaks out, it may go back to the apex. Okay, after it breaks out, it will go back into this point. Okay, before confirm again. Okay, price target. The last one is what it means. Price target is you can draw the biggest part of the base. Okay, biggest part of the base. You can use this part 5.8 and then project it up from the breakout point 5.8. This will be your price target if you want to use a price projection. Okay, so again, symmetrical triangle, you can also use price projection. Okay, so this is what we call a triangle. Okay, you can use the same principle to go into ascending triangle, descending triangle. Okay, usually triangle the percentage are higher. Okay, like is higher compared to reversal pattern. Okay, so this is a short training on what is head and shoulder pattern, what are chart patterns. If there's more time in the future, we will actually go maybe have a seminar, a full day seminar on what is chart pattern all about. Okay, it's actually very useful if you know how to use chart pattern to confirm with your trader GPS signals. Okay, so let's go back into our market today. Okay, what's happening in the market, and then after that maybe I just look through a few stocks. Okay, later there's a radio interview, so I need to also hurry up a bit. Okay. Okay, so let's go to the next part, which is on the different index. Okay, let's do a scan first. Okay, let's do a scan on the different index first. Okay, let's go to the index. Okay. Okay, if you have any question later part, you can post the question under the comments level on the Facebook. You can post it up over there. Okay, and I'll try my best to answer all your questions in the Facebook. Okay. Okay. Can we keep the question limited to chart pattern and not the individual stocks? Okay. I believe we have done enough to let you interpret the individual stocks. Okay. More of chart patterns, how you can ask some question about how to identify chart pattern. I think that will be useful. Okay. So not on the individuals. Okay. So let me share this window here. Okay, so this is what we have done. Okay, what happened is we have scanned all the index. Okay, and from here we now know that what are the weakest versus the strongest index over the last 1 month. Okay, so these are the weakest. Okay, these are the weaker. These are the weaker index. Okay, okay, US dollar. Okay, mentioned that US dollar is weak. Swiss market, we also mentioned last week that it's weak. Okay, Nikkei 225, we also mentioned last week that it's weak. Okay, this one, remember, when we go back and look at the last week webinar, we actually mentioned all these countries being weak. US dollar, Swiss market, Nikkei is being weak market. Okay, what are the strong markets? Okay, relatively right now, relatively. Go back and look at last week's webinar. Okay, we mentioned these three markets that are weak. Okay, what are the strong markets right now? Okay, relative to the STI, relative to S&P. Okay, we have Shanghai. Shanghai is relatively stronger still. We have also okay, the Sensex. Okay, the Sensex is also relatively stronger. The S&P is also relatively stronger over here. What I don't see over here is STI. STI was actually relatively strong last week. Okay, but actually right now it is no more here. Okay, where is my STI? Okay, so later part you can actually go through and see where is our STI. Okay, STI is still relatively weak right now. Okay. The markets are still about the same. Okay, so okay, so to give you a brief idea of the market, let's go into the individual index first. Okay, what are the index? Okay, let's look at the Shanghai index. Okay, we must also look at the STI. Look at the STI. Okay, and maybe just the S&P 500. So these are a few markets we want to look at. Okay, so let's say example we have the Nikkei, Nikkei, STI, and so many markets. Okay, so let's start with one first. Okay, we have the index. Okay, this is Shanghai index right now. China market. Okay, we move away all the indicators first. Okay, so before we move, just want to mention that right now trend is up. Okay, trend is up, but the trend is not confirmed. Okay, so it's a weak weak uptrend. Okay, it's still a relatively weak uptrend. Okay, for the Shanghai market right now. Okay, but the downtrend, okay, which is this part, okay, downtrend. This downtrend has completed. Okay, so there's no more strong downtrend right now. Okay, so right now has turned into a weak uptrend right now. Okay, for the Shanghai market. Okay, okay. Let's look at Nikkei right now. The next market. Okay, Nikkei also same thing. We have the price. The strong down is completed. Okay, right now it's a weak up. Okay, it's a weak up. Okay, support is around here. Okay, so now it's a weak uptrend. Okay, the last one is STI. That's my STI chart. Okay. Okay, apologize. The Wi-Fi is a bit slow. Okay, so okay, remember if you have any question on the chart pattern, you can actually post that up in the Facebook group, and I'll do my answer them. Okay. Go before you ask question, maybe you can actually read through. Okay, do read through on maybe on stockcharts.com. Okay, all the different chart patterns. You go to stockchart.com under chart school. Chart school is a place where you can actually learn a lot more about chart patterns. Okay, a lot more about chart patterns, and I hope this can help you also in your trading. Okay, so again for this STI. Okay, STI. Right now, okay, the down, there's no more down. Okay, but the up has actually slowed down. Okay, the up actually slowed down, and then right now it's a weak uptrend. Okay, a weak uptrend, and previously was a strong uptrend. Can you see from here? It was a strong uptrend, and then now it has turned to a weak uptrend. Okay, a weak uptrend. Okay, if you draw a trend line, okay, draw a line, then you can see something like okay, you can draw a trend line down. Okay, there is something like this. Okay, give me a minute. Okay. Hello? Yes, yes. Hey, hi, Julie. Yeah, maybe the S9. I'll pick up some stocks to look at also. Okay, I'll look at maybe I'll pick up some stocks later. Any particular thing? Uh, Japan. Okay, can. I'll go more technical lah. So what levels? Yeah, from Japan. Please talk about the what's happening now. Yeah, study. Yeah, sure, sure. So we talk about the market. Okay, can thanks now to be. Okay, sorry. Okay, so coming back again, that was the radio station just now. Okay, so okay, on the STI, okay, if you look at it, right now this is the trend down, okay, and then right now maybe come back and test this trend line. Okay, on the Facebook, I actually mentioned about these two levels, okay, they must look at. The first one is this swing low over here. Okay, this is on the chart, okay, about this level. This will be actually the swing low that you must watch. Okay, should not drop below this swing low. Okay, the swing low is around 27, around here lah, 2,700 plus. Okay, this is the swing low. Okay? And if you go to the weekly charts, okay, if it breaks below this low, then possible that change. Okay, so if you go to weekly charts, okay, weekly charts already start to break below the low. Okay, you see on the weekly charts, if you do it with the MA, it's just nice. It's just nice. What we call the swing trade for STI. For STI, correct. Wait, actually a trade now. Okay, so we have the CCI that is high, and then hitting the MA, the moving average, and then right now it's coming down this way. Okay, it's triggered already. Okay, so right now it's coming down. Okay, so STI right now, levels to look at is 2070, and the high will be 2,900. Okay, this will be the levels to look at for the for STI. Okay, 2,900. Okay, to around 3,000. These are the levels to look at. Okay, okay, for STI. Okay, the next level to look at is around 3,000, 3,100 over here. Okay, but let's look at this swing trade first. Okay, so likelihood, talking about weekly charts. Okay, weekly charts, the trend is down. Okay, the trend is down. Okay, it means the long trend is down. Okay, because the MA sloping down, PCI now overbought. Okay, so the on the weekly chart is down. Okay, on the daily charts, as I mentioned, 2770. Okay, this is the level to look at. If 2770 get broken, also tell you the next wave coming down. Okay, anything above that is still up. Okay, on the daily charts. Okay, on the daily charts, if you see this, okay, we have drawn the trend line down. It's broke above the trend line. If it tests and doesn't break down, okay, but rebound, then we will consider it's still up. If it tests and break down below the 50 MA on the daily charts, then we know that this trend has also break down. Okay, has also come down. Okay, so that's for the charts. Okay, let's do a comparative right now on the GPS, and later actually on the radio I can actually talk about it also. Okay, actually I have not prepared what stocks to talk about. Okay, so let's do a quick one on the STI charts. STI, okay, because they always want us to talk about the market. Okay, so go to Trader GPS. Okay, and from here go to okay, and then from here we go to SGX, and screen. Okay, so we screen for stocks, SGX right now. Give me a moment, okay. Okay, so what are the stocks to look at? Okay, for today. Okay, sorry, the Wi-Fi is a bit slow. Okay, so let's look at some of the stocks. Okay, somebody mentioned about CWT. Okay, so the CWT is because of the volume. Okay, if the volume is not set too high, then you can filter out this stock also. Okay, so CWT bot stat is some of the stocks that you can look at. Okay, CWT bot stat. Okay, these are some of the stocks you can get for. Yeah. So let's go to also DBS. Okay, if you look at right now is at the support. Okay, so I think today haven't updated the data because if it's break below the support, also not so good. Okay, previous trend was up. Okay, strong uptrend, and then after that followed by down. Okay, so let's say this part was up. Okay, right now currently the uptrend has slowed down. Okay, so this for DBS, CWT. Okay, this is another stock to look at. This okay, this is another stock to look at. Okay, trend is turning up. Okay, getting stronger. What that is something that you can look at. And the last one is CWT. Okay, you can look at. Okay, so okay, I think the Wi-Fi is a bit having an issue with the Wi-Fi. Okay, so if not, then thank you very much. This been a 1 hour, almost 1 hour webinar. Okay, hope you can learn through chart patterns. Okay, experience what is chart pattern, learn some more about what's chart pattern, and hopefully you can use it for your charting or for your trading in the future. Okay, I hope that you all can continue to become better, okay, in your trading. Understand that trading is not about home runs. Okay, trading is never about home runs. Trading is always about learning how to manage your risk. There will be that there will never be 100% hit rate. Okay, but what we want to do is always to manage your trades. Okay, always to manage your trades. Okay, if not, then thank you very much. It's been a good pleasure giving this webinar with you all, and hope to see you next week. Okay, bye bye.